What's going on, everybody? Welcome to Armor Bull Trading, aka the Fisher Trader. So we're going to go ahead and push that on out the door. So what we're looking at here is I'm going to give some probably multiple videos in the same segment of setup that you see here, so no judging. So what I want to do is basically kind of start over. If you go back and look at my videos from the past, you will see that a lot of them just touch base on specific options, things, strangles, straddles. I never really got into how to begin, right? So I'm writing a pretty big book right now that I finally had a breaking point. I had to kind of stop. So I'm continuing on that. It's going to literally take you from the beginning of how to get started to the end of where I am currently at the moment. You know, whenever I get done with the book, that'll all be built in. I project it'll probably be done sometime later this year. This is 2020. We are currently in October. Looks like the 12th, going on the 13th, and right now it's approximately, I don't know, 10:30 p.m. here. Well, apparently 10 p.m. Over here on the East Coast. So welcome. Hopefully the autofocus does not do that 100 gazillion times in the video. Matter of fact, let me back it up a little. Maybe that'll help a little. Let's see. All right, so what we're going to talk about is the basics of options. However, first we're going to talk about how to begin trading. So what you want to do is essentially open a brokerage. How old can you trade? Well, anyone can open their own trade account at 18, given. Okay, 21, of course, 16, a little more complicated because you're not technically an adult, so you need to have a custodial account. 16 down to, I believe, you can have a custodial account where you can trade down to the age of 16. Don't kill me on that. But I do know that custodial account, you can trade stocks, you can have bonds, mutual funds, things like that. You cannot trade options, futures, or any sort of other derivatives of that nature. So with that being said, let's talk about how to begin. So let's assume you're 18 years old. This is not what we're looking at. We're looking at here on how to open an account. All right, this is Fidelity. Hopefully you guys can, let me zoom that in a little bit here. All right, matter of fact, you know what, let's bring it a little closer there. There we go. Sorry, you guys are, this focus is crazy. I gotta get me a camera, man. Anyway, so here you go, Fidelity, open account, open a rollover account, open a brokerage account, open all kinds of different accounts, right? So you got your savings for education, your managed accounts where they actually do it for you. I'm sure there's plenty of fees wrapped on into there. Cool thing about Fidelity is they have their own funds that are fee-free. Also, they are pretty much completely free to invest in because it's a Fidelity fund. So if there is a managing fee, it's very, very minimal. Of course, you have little segments over here, transferring assets from another firm, brokerage, etc. If you have any issues, of course, there's helplines. I'm not being paid or anything by Fidelity or whatever, because I'll mention Robinhood and Webull, and I'm not a fan of TD Ameritrade, but it is what it is. TD Ameritrade, you can do the same if you like TD or whoever you're learning with, or maybe a chat group or something like that, that they all trade TD Ameritrade. You can go that route, no problem. Anyway, so what you would do for your standard trading that we're going to be talking about is here, investing in trading brokerage account or brokerage and cash management, two different accounts. You'll be looking at a standard brokerage account. This is how you trade options and things of that nature. Now, you do have to be approved to trade options. Many people do not tell you this, and there's a lot of fine lines on this. So before I get any further, let me go ahead and say that this is the disclaimer. I am not responsible for anything that you do yourself. No trades, no accounts open, etc., etc., etc. Your money is your money. Please don't trade any money that you need, your house payment, your car payment, your alimony, any of these things. Do not trade those things. If you do not have this excess money that you can lose, as in just it's gone and it's not going to destroy your life, etc., proceed. Now, let's get started. First thing you're going to be asked, individual or joint? Well, if you're opening this account up with someone else, wife, girlfriend, parents, whatever. I mean, I guess it could be a parent. I don't think that would really make a difference as far as custodial. I've never done that myself. My mom has her own account. I have my own account. So, and so on and so forth. My accounts are all individual. Of course, you can have beneficiaries and such attached to your accounts. So if you click individual, go on and click next. Should have pretty decent internet. It's pretty 10 o'clock over here, so we shouldn't have any problems with internet service. Got my routers all in place. I promised you guys I will get a better camera and get some quality videos here. Are you a Fidelity customer? Yes or no? So select yes if you already have a brokerage, IRA, 401k, or etc. Okay, do that. So we'll just say yes because I do. If you do, you'll go ahead and log in. Now, let's go ahead and say you don't. Now it's going to say, okay, please enter your name and your address. So now you'll go ahead and put your information in. So let's just pre-populate my name here. All right. Get started. Probably going to tell me there's already somebody with that account. Okay, no, we're good. Okay, so essentially here, boom, personal information page. Yes, it is an investing account with money. The federal government is involved. FINRA, SEC, all these different agencies are involved, so you must include your personal information. How else are they going to know how much money you make or lose, right? Quick note, when you're filing your taxes, a lot of people neglect to file their taxes, but the good news is when you're in a quality brokerage, even Robinhood, they actually send you a 1099 form, which has all of your different stuff on it. It could be a 1099B or just 1099 general or G or whichever. But when they send you that form, you'll have all of your information. If you made 5 trades the whole year and you lost money on every single one, all those trades will be there. But the issue is with the IRS, they don't know what you sold it for. All they know is what you acquired it for. So if you sold it at 50, but you bought it at 60, that's a loss, right? But as far as they're concerned, all they saw is you sold it at 60, so all they're seeing is a return, right? So if you bought it at 10 and sold it at 50, that's a capital gain. So most cases, depending on how much the capital gain is, the amount of time is sometimes factored in here, but you'll need to essentially just roll it into your taxes on your personal side. Now, if it's joint, obviously it's going to be built into both people in the account. Otherwise, you can just essentially, I wouldn't recommend. I've heard people doing this. They pay taxes as they go, and or they just set aside the amount, which is not bad. You can set aside the amount that you should be owing in taxes. The only issue with that is if maybe the first half of the year, first 6 months, you're doing amazing, right? You're making money hand over fist. You don't know what to do, but gets a little rough. Say the market crashes, pulls back, spikes unexpectedly, and you're on a short position, you lose a bunch of money. So now, whereas you've had this big, kind of cash pile aside, it might tempt you if you don't have any discipline to go and kind of pull from that money because, hey, you're losing. You got to make sure it's all right. But say you get to the end of the year and now you're actually way up, where you were, you just don't really realize it. But guess what? Now you have to come out of pocket. Whatever your profits are now set aside in the end. So say, you made 10 grand for the year, but your taxes are 9,000 on the total gains for the year, because you look at that profit and all this good stuff. So a lot of different factors kind of mold into place here. Now, the good thing is if you lose any money, so you can have, this is very tricky for a lot of people. A lot of people don't understand this. That's why I'm making this video. You can have, say you have a $12,000 loss, right? You can split that 4 times. So you get 4 years to write that off. So you can actually write that off for $3,000 max per year. So you have $3,000 one year, $3,000 another year, $3,000 another year, $3,000 another year. Gives you 12 grand, right? Therefore, boom, now you have this 3,000 that's kind of rolling, it's assisting you. Now, the only difference is if you begin making a lot of money that completely offsets that loss, now it's not going to be a loss. But I believe you still can write off that other piece. Please check with your CPA or your financial advisor, et cetera, et cetera. This is just kind of a ground baseline, kind of throwing some information for you guys. I'm not certified yet in financial, but I will be. Just want to throw that out there. Be honest, be transparent with you people. Anyway, so yeah, so you get to this stage and now you're putting in your information where you live and all this good stuff. I'm not going to fill this out because it's going to take too much time. No, I'm not a slow typer, but for the video's sake, right? So fill all this good stuff out, click next. Once you do, This is built for U.S. residents. I'm not familiar with, outside trading brokerages, Canadian and other countries like that. So when you get this far, proceed. You put your social security number and all this good stuff. 99% of the time, it takes around 24 to 48 hours to get approved. As long as you're not having like federal background problems with money. Okay, and also assuming that you're not a 10% holder in a company, or you don't work for a brokerage already and or trade for other people already for a living, because those things will matter. So what you will do next, continue, make your account, etc. All right, next step. So say you have your account, right? You're ready. So how do I trade? How do I start trading options? Well, here's the tricky part for a lot of people, is that unless you're putting $10,000, $20,000, $30,000 into an account, you're not going to be able to trade debit spreads, credit spreads, iron condors, and things like that unless you have, I believe Fidelity has a minimum account balance of $10,000. You will not be able to trade credit spreads and all those things on here. That's where Robinhood is really competing heavily with these big brokerages, because regardless of whether people are making or losing money on debit spreads, credit spreads, etc., it doesn't matter. The fact of the matter is, when you open a Robinhood account, you start with an individual account, pending it's just you or you do join or whatever. But they give you an instant settlement account. You have instant cash settlement. Therefore, you're restricted by the pattern day trading rule, which if you don't know, I have another video on this, but pattern day trading is 3-day trades in a 5-day moving window. You're restricted. Now, once you break into number 4, you get restricted, right? This doesn't mean you can't trade anymore. It just means you're restricted to trading day to day. You cannot trade in the same day as a day trade, but you can trade day to day. So say I got hit with pattern day trading on Monday. Now I can trade, let's say I can buy on Tuesday and sell on Wednesday, and et cetera, et cetera. It forces you to let it settle, right? Of course, I personally think it's criminal. I think it's a bunch of BS that the government is able to do this, because in all respect to FINRA and the SEC, whoever invented this, I could probably tell you the name if I went back in my stuff and looked, but I actually wrote a petition on change.org for this. Go find it, or I'll put the link below, to at least reduce the pattern day trading rule. And it's not that it's a good or a bad thing in general, but it's keeping the little people down, right? And I myself, I'm in the little people, right? I'm included here. I don't make, $1 million a year or any kind of crazy stuff like that. But the crazy thing is, unless you have $25,000 cash that you can put into this account, right, you can't day trade, right? Now, before we go any further on that, I will mention the cash account. Many people love cash accounts because you have unlimited day trades. All right, that's a crock of crap. Okay, I'm trying my best not to cuss here. Now, when they say unlimited is based on your account balance. If you have $500, let's be real. Do you really think you have unlimited day trades? Probably not. The most trades you're probably going to squeeze is 5 to 10, either 5 $100 trades or 10 split trades, and the difference of that. So it's either going to be you're going to have no buying power, and then guess what? Oh, they got you here on the cash account. It's called a good faith violation. It's not the pattern day trading rule. It's the good faith violation. They let you have 3 in a 12-month window, right? Big difference, right? So now, if you're a very disciplined trader and you've been trading for a while, you kind of know what you got going on. You know that you can't trade 25 times in a week on $1,000, unless you're really trading small positions. But in most cases, a lot of people love the cash account versus the pattern day trading standard, which is fine. Now, the only issue with that is on cash accounts, like per se, TD Ameritrade has a cash account. You cannot trade spreads. You cannot trade credit or debit spreads and things like that, because you must have margin to approach that sold position that represents all of these shares that you don't have, right? If you do have them, then it's a slightly different story, but chances are you're still not going to be able to trade them on cash account. I have not experienced with that specifically, but continuing on. So my issue with the pattern day trading, and where I've had debates with people in the past about the principle of the pattern day trading rule, where again, it's the 3 days in the moving 5-day window. Now, I personally have never been affected by the pattern day trading rule. It has limited me from capitalizing on some positions here and there, sure. But on the cash account, the same thing. On my big account, that's what happens. I get constantly hit with a good faith violation on my big Fidelity account. I've been hit with a good faith violation probably 6 times already, right? And the first time they give you a warning, and then they give you another one, and then like I said, you get up to 3 in a whole 12-month rolling window, which is just, it's stupid. But the logic behind my thought process on it is that it doesn't matter if you have unlimited day trades, because if somebody puts, say, 25,000, right? Say they gamble it away. Say they put 25,000 on black, aka let's say they put it on Ford Motor Company stock. They put all $25,000 in there and they traded it 50 times in the same day. Who would do that? I don't know. Hopefully they made a lot of money. But what I'm saying is chances are they're going to lose that money, right? So now they're under 25,000. Say they lost $5,000 in the first day. Now they can no longer be free of the pattern day trading rule. Now they must either put that money back in to put it up over 25,000, or now they have to trade very cautiously across the line, or they're going to gamble it to try get back over faster. See, many people do this. Tons of chat group folks do this all the time, constantly blowing up accounts, etc. I've blown up accounts, but not necessarily in that manner. It's been for something kind of like a win big situation thing. You know, when it gets me or whatever, but that's irrelevant. So the point is, if somebody wants to spend $100,000, but they only want to put $5,000 in at a time, say they only have that additional $5,000, you know, every month or something like that, right? But they get over there, you know, like, you know what? I'm going to throw $100,000 in here total over the next 2 years. Guess what? They lose it all. It's the same exact thing. By the 5th time they put 5 G's in here and they lost it, they've already lost $25,000, and it didn't matter if they could day trade or not. They're still throwing the money away and gambling and blowing up the account. Therefore, if they put the whole $100,000 in the account and lost it in 2 months, guess what? It's the same freaking difference, dude. Do not think for a moment that until you have over $25,000 in the account, presumably 30, because that gives you like a $5,000 window, okay? Do not assume that you have unlimited day trades. A lot of you new coronavirus day trader kids, teenagers, whatever, because you saw some dummy on TikTok telling you to buy a stock here, when in reality, freaking March 16th, it went down here. All of you dummies that bought it up here lost a bunch of money, okay? And this is just being real, all right? Because I watched it myself, because I had TikTok for a very short amount of time. I think I still have an account, don't know. But I watched this kid, yo, SPYD. The only thing that's different for me is this kid pointed out SPYD because it was something that I wasn't really following. I never really looked at it. I've looked at many deviations of SPY, but I never really dug into the SPYD. But I made my kids' account some money on it since, you know, this silly person, dummy, I don't know his name, so it doesn't matter, you know, told you to buy it. I think it was like 29 and it went all the way down to 20. So you would have lost $9 a share on that drop. Most people would have sold for the loss, or maybe they held and then maybe they had more money and they bought it down here in the $20 range because that was where it bottomed out. You know, Trump and whoever else with the Fed pump money and the whatever that company was called that was buying just monster call premiums or whatever the case, caused the market to just right back up. If you watched my videos in January, you would have seen my kind of expectations for the market. I'm still expecting another drop. We're now at election time, 1 month away. I'm really digging a market crash right now because I've got a monster position ready to capitalize on that, and it's going to be beautiful. However, if it doesn't, guess what? It's okay. Because you know what debit spreads do? Debit spreads, which we'll talk about in another video, limit your risk up front, but give you a high probability of profit versus a credit spread, similar position, opposite side, you're putting up collateral, therefore you're receiving a credit that you can't have. But until the position realizes said, you know, profit, you're not making money on either one anyway. So, with that being said, vote. You know, whatever. I'm not going to talk about voting. Anyway, make your account. Now, back to this. Okay, outside of all the PDT and good faith violation, all that stuff, I actually made a video on that. You can find it or whatever. But fact of the matter is, there's no such thing as unlimited day trading until you break that 25,000 mark. Otherwise, disregard. All right. Anybody that says that clearly is just not focused on your specific question, because there's no such thing as avoiding it. And there's no such thing as not having it until you get over $25,000. Now, a cash account gives you a little bit of leeway because you can trade, say you have the $10,000 and you trade, five $2,000 positions multiple times in the day, and then you let them settle overnight because options generally settle in a day. That's awesome. Stocks do not, just FYI. They generally settle in 2 to 3 days, depending on your brokerage and whoever they got them from. So you need to keep that in mind. But what you need to realize is that once you do that and you get on that cash account level, you'll have to maintain that constantly. Now, once you get over that and you're at $25,000, $30,000, $40,000, $50,000 or whatever, of course you can go over to the standard account. You don't have to worry about good faith violations or pattern day trading. As long as you maintain over $25,000, regardless of your account balance, you'll be fine. So, again, I guess I hit a button, so it's telling me we got to fill in all this crap. We're not going to do that. But what I do want to say, let me see if I can hit the search button here, get us over to where it talks about options. It's probably not going to let you go that far. No, we're not doing that. So let me see. Probably got to cancel this form. Let's see. Exit. And there we go. The bottom left, just in case you didn't know. Exit my application because I already have accounts. All right, let me just tag over here real quick to options. Now with Fidelity, the cool thing is when you request a specific type of options, it'll actually tell you, good to cancel, that's funny that popped up. It'll actually tell you, when you're going to sign up for your options. And the cool thing about Fidelity, they have this learning center, right? You can actually go through here, learn about options trading through Fidelity and all this good stuff. And they have a lot of information. Now, generally, it's going to be basically what I'm telling you. Now, what I'm going to say is that once you open up an options account, you'll be asked if you want margin as well. And if you want to be on the level with debit spreads and credit spreads and all this good stuff, you have to have margin. Open the margin account. You will be asked specific questions. I can't elaborate on this because I'm probably breaking some sort of law. But all I'm going to say is that the questions must be answered in the correct response to be approved for said level of options trading. I myself have been trading for right around 4 years, like 2.5 years, like really digging in. And options have been part of that last 2 years. So what I will say is, if you don't answer the questions correctly and you don't have the experience to trade said options and risk of derivatives and et cetera, and anytime you sign up for these accounts and be approved for options, no matter what brokerage it is, they send you this nice little book. I've got it in the house. I should have brought it with me. It is a nice little book that literally goes through and explains all these different, types of derivatives and options and the risks involved and all this good stuff. 95% of the people that you mention options to will say that it's just gambling and blah, 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 which is cool, man. You don't want to trade options, don't trade options. But it's just a matter of taking advantage of your money in a whole different way because there's things you can do with options that you have no chance of doing just trading stocks. Fact of the matter. So I think it's going to conclude it. We're about 23 minutes on this video. I need to go ahead and switch over to the next video, and we are going to talk about options basics. And we will kind of get right into that. I'm back to the camera a little bit. Hopefully it doesn't do the auto zoom too much. But yeah, Fidelity is my favorite brokerage. If you must know, I trade options out of there. I trade mostly my retirement accounts, my kids' accounts, et cetera, et cetera. I like Robinhood still. I still not have any major issues with it. Recently, they had the people hacking specific accounts with their emails and stuff like that because they didn't have proper passwords. Therefore, they got hacked and their money got stolen. Multiple tens of thousands of dollars went stolen, missing, deposited to other people. The people that did that, bleep you. Sorry for my gesture there. But all I'm going to say is that was extremely inappropriate. But put 2FA on your passwords. Do not just make it's money. It's money. It's like a bank account, basically. It's got your social security number attached to it and all this other stuff. Please secure your money. Okay, put the proper passwords, the proper stuff. Use the 2FA, use the text message confirmations, whatever you have to do to confirm that it's your account. Preferably probably not email, just because it has to go through the email, which can easily be hacked. If they have your email address and password, chances are they have your account password. Don't be silly. The 2FA is constant through your phone. It is an app that you download. You can go there and it's a constant timer that's running. Every time it runs around, I think it's 20 or 30 seconds or probably less than that, it actually counts a new number. And every time that number changes, it changes on the screen for your Robinhood or whichever account you log into, 2FA, and then there you go, you're good. So on that note, we're going to end this video. Thanks for watching. Again, this is Armor Bull Trading. Appreciate you watching. I'm going to go ahead and switch over to the next video, so stay tuned.